This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XTX index is currently at 42,680. Well, it was $89. Now taking a step back about 2.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. Let's take a look at some of our top stories. Bitcoin falling back after rising to its highest price in a week, recovering somewhat after last week's abysmal start to the year. Bitcoin buyers are holding support around $40,000, according to CoinDesk's Dominic Dantes, as oversold signals appear on the technical charts. The Bitcoin market may have gotten its earlier boost from a U.S. Labor Department report Wednesday showing that the Consumer Price Index rose to an annual clip of 7% in December, the highest since the early 1980s. There had been fears in the market that prices might have climbed even faster, which would have put additional pressure on the Federal Reserve to move more aggressively to tighten monetary conditions and cool down the economy. Meanwhile, Goldman Sachs is bullish about the prospects for fourth quarter earnings for online brokers due to a surge in crypto trading revenues and increased activity from retail investors. GS saying crypto exchange Coinbase, bank Silvergate Capital, and trading platform Robinhood are expected to post the strongest results relative to estimates, with total crypto trading revenue at Coinbase and Robinhood to rise 62% and 18% respectively from the previous quarter. And El Salvador's Bitcoin trades are adding to El Salvador's sovereign credit risk, according to Moodys. El Salvador currently holds about 1,400 Bitcoins, which Moodys concedes isn't large enough to prevent the government from meeting its obligations. Nevertheless, the ratings agency downgraded El Salvador's rating last summer and continues to have a negative view on the country's economy, but sees pension reform and a proposed blockchain bond issuance as potential positives. Finally, the government of Pakistan and its central bank want to ban the use of cryptocurrencies. Local media reported, citing a document produced by Deputy Governor of the State Bank of Pakistan and other high-ranking officials. This marks the first official stance taken by the central bank. All right, joining us now to discuss the crypto markets is Noelle Atchison, head of market insights at Genesis Global Trading and a sister company to CoinDesk. Hello there, Noelle. Always a pleasure to have you on. So I want to ask you, what's behind this slight bounce in Bitcoin's price after a near 30% decline from its all-time high around $69,000 in November, though it is taking a bit of a retreat right now?
Hi, Christine. Always great to be with you. I do have to say that these are my opinions, not those of my employers, and nothing I say is investment advice as usual. What's behind the Bitcoin price move? Some people are saying that, look, see, this is Bitcoin behaving like an inflation hedge again now that we had that print that you mentioned earlier. It's not necessarily that. We haven't seen any evidence that Bitcoin behaves as an inflation hedge in the markets. In fact, we've probably seen quite the opposite. What we're seeing now, is the reawakening of interest in risk assets. As you mentioned, the inflation print was very bad, but not worse than expected. That's the important thing. And the market does already seem to have digested that there will be 3 to 4 interest rate hikes this year. If it turns out that the economy is heating too much, well, obviously that would be very bad news because that might indicate there would be even more. That's probably the fear that we've been seeing in crypto asset markets as well as other risk asset markets over the past few weeks. And Bitcoin's increase over the past couple of days is the unwinding of that fear. It is so it's not going to be quite as aggressive a tightening as we had feared. This is the risk asset behavior that we've been seeing for some time now.
All right. Another interesting chart that you brought to us shows that traders are once again increasing their leverage on Bitcoin trades. This is a perpetual interest in blue and BTC price in gray. So what is the story this chart is telling us?
This is an interesting chart because it looks at futures open interest in context of the overall market capitalization, because it's very easy to say, look, open interest is going up, but what if market cap is going up even more? That means overall leverage is declining. As you can see from this chart, that is not what we're seeing. What we are seeing is perpetual open interest.
Well, it appears we have lost Noelle. We'll try to get her back and solve some of those technical difficulties. In the meantime, hold tight. We're going to take a quick break.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, welcome back. The Turkish lira is more volatile than Bitcoin. The lira nosedived in the final quarter of 2021 as Turkey cut interest rates amid high inflation. TradingView data showing the lira's 90-day historical volatility, a measure of how much the price fluctuated from its average against the US dollar, has risen to an annualized 65%. That's a five-fold increase in 2 months. Bitcoin's historical volatility has dropped to 61%. So that is causing Turks to pile into Bitcoin and stablecoin Tether, according to a Wall Street Journal report, adding that cryptocurrency trading volumes using the Lira are soaring to an average of $1.8 billion a day across 3 exchanges, as seen in this chart by blockchain analytics firm Chainalysis. Those volumes are still modest compared to roughly 71 billion of Lira transactions a day, according to a 2019 Bank of International Settlement survey, but still a significant jump from the preceding 5 quarters. And we've got a second chart there, and that shows increasing interest in stablecoin Tether, which is pegged to the US dollar, as the share of Lira Tether trading volume shoots up, seen in red per Crypto Compare data. All right, joining us now to discuss is Isaiah Douglas, partner at Indiana-based financial planning firm Vincere Wealth Management. Hello, Isaiah, thanks for joining us. So the U.S. reported a 7% inflation increase in 2021. That's a 4-decade high. Is Turkey the canary in the coal mine for what could happen to countries with runaway inflation?
I mean, it could, right? Like, is Turkey going to be the economy that changes everything? We don't know for sure. And I think that's a tough one to look at, but there absolutely has been demand in the country, as you just talked about. When you start to see the faith in the currency go away, Bitcoin, stablecoins start to become really interesting to the population. And I think that can certainly be something that has been shown around the world. I mean, you talked about El Salvador a little bit earlier, and see the adoption there. So certainly can be.
Do you think it's a trend that could catch on to other developing nations?
Absolutely. I think the announcement from Strike and what they're going to do down in Argentina is really interesting. And you just continue to see, I think, those in the United States, we are really spoiled, right? For the most part, the US dollar has been such a great currency, but around the world, there's a lot of people that are affected and do see, overnight, basically their savings of years and years wiped out. So it wouldn't surprise me at all to see the adoption be there first, because I think the way that most US investors look at Bitcoin is not as much from a savings and medium of exchange and unit of account, but overseas, that certainly can be the case where they start to look at that as, hey, this is something that's more reliable than what I'm currently using for my government.
All right, so you wrote an article for CoinDesk, what advisors should know about Bitcoin and inflation, and maybe you can go over what your thesis is here.
Yeah, so the thesis here is inflation is certainly here. It's here to stay. And the idea looking at with the US dollar, it's really hard to project what is going to happen over the next 6 months, 6 years, as far as the creation of new dollars. And if you look at that from an M2 perspective, it really started growing, from early 2000s through about 2010 at 5% annualized as far as new growth. Then from 2010 up till 2020, it was more at a 7% annualized clip. Since 2020 and kind of the COVID stimulus and that injection into the economy, it's closer to 18% annualized. When you start to look at that, the impacts are drastic across the board on the cost of what it takes just to live, to get by. And you can see that home prices, food prices, used cars, new cars. And yeah, so the thesis is saving and storing wealth in Bitcoin can help allow you to continue the lifestyle that you're looking to live.
Do you think the U.S., though, will get inflation under control with rate hikes predicted over the year and eventual winding down of the trillions of dollars worth of bond buying?
I think we're kind of between a rock and a hard place, right? So if we drastically raise interest rates, a lot of other things in the kind of economic system start breaking. So you have kind of two things. You let inflation run hot and the debt kind of eases off, and that's just really painful for us. Or you try to hike rates and see what happens. And again, my crystal ball is a little cloudy. I don't know for sure. And I know that a lot of people would love to have clarity there. But if I was to make a case, I look at inflation likely running higher for longer, just because the issues with the supply chains. What you're seeing is that coming to fruition as far as then the producers of everything jumping. The U.S. Producer Price Index actually today came out at 9.7%. Which is the highest year-over-year increase that's come out. So every company now has the excuse to go raise prices, even if they aren't feeling that pressure from their vendors or service providers.
So how much do you think people should be shedding dollars for Bitcoin? What kind of allocation are you talking about?
That's the question that it's going to be the answer. I think your previous guest talked about it, right? Like everything's going to be my opinion, right? And it's always going to be it depends, which I know is a tough answer for that question. I did write a piece for advisors for CoinDesk talking about, hey, how can you look at Bitcoin in an allocation? Is it, hey, it's a hedge for fixed income and bonds. It's a kind of a growth sleeve. The way that we've looked at it from a Vincere perspective and with clients is make an initial allocation and then dollar cost average into it. Let the volatility of Bitcoin, as you talked about, coming down from high 60,000s down to lower 40s. Buy your initial allocation, get Bitcoin exposure, dollar cost average in from there and let the volatility do its thing. But if you just dollar cost averaged into Bitcoin last year, you were up 26% daily, bought every single day throughout the year. And that is something where if you look at the costs and increases in prices of homes, cars, food, that's helped preserve purchasing power, which is the whole thesis behind the idea of using Bitcoin as an inflation hedge.
Great. Well, Isaiah, thanks for joining us. And viewers can read your full article on CoinDesk.com. That was Isaiah Douglas, partner at Vincere Wealth Management. And I understand we have Noelle Atchison back. Welcome back, Noelle. So we were in the midst of talking about a chart that you were showing us on open interest and BTC price. Tell us a bit about what this chart was telling us.
I will, Christine. I'm so sorry about that. I don't understand why the fiber optic Ethernet suddenly failed on me. Apologies for that.
Technology.
Now, to this chart. This is interesting because it looks at perpetuals open interest, not overall open interest, but perpetuals. And perpetual futures, as you know, Christine, tend to have higher leverage, significantly higher leverage than traditional futures exchanges offer, such as the CME. So looking just at perpetuals gives an idea of the degree of leverage that has been creeping back into the market. And as we can see here, it is considerable. Does that mean the market is at risk? Well, always when leverage creeps back, there is a risk of a sharp move up or down. We don't know from this chart whether the leverage is on the optimistic side or the pessimistic side, but it does look like there could be some sharp moves coming up as liquidations do their thing.
All right. Is there still room for Bitcoin to fall, or has it bottomed out? Where do you see support and resistance?
Again, this is my opinion, but there's a lot of on-chain data, Christine, that is showing we're at a support. The kind of on-chain data that I'm thinking of shows that the market capitalization relative to the real economic activity on Bitcoin, in other words, the realized value, that is flashing buy signals. We also are seeing signs of long-term holders renewing their either holding activity or their buying activity. Long-term holdings, the amount held in long-term addresses, on a 30-day change basis has turned positive recently. We also know that the supply of Bitcoin that hasn't moved in over a year continues to increase. The supply that is held in what is defined as liquid addresses continues to increase. So there are very strong on-chain signals that are saying there's a lot of accumulation going on by longer-term investors that don't see Bitcoin as a risk asset, and that the market is not valuing yet this strong accumulating activity.
Do you see a difference between institutional and retail activity?
Retail is coming in. We're seeing some signs of that, but not in a frothy way yet. There's nothing that's flashing froth just yet. And typically in any cycle, when the price starts to get ready to resume its upward trend, then you do see retail investors starting to buy again, but nothing that indicates we're near a top like we have seen in previous cycles.
And finally, Noelle, 2022 predictions for Bitcoin.
Now, I can't give a particular price other than I think I can say up. I think I'm allowed to say that simply because, Christine, of the fundamental accumulation that we've been talking about. It will always be a risk asset for a very important cohort of investors, but that's not the only story that's going on. And not only is that a strong bullish force, and we also are seeing miners that are just not selling, not only is that a strong bullish force, but it also reminds us that Bitcoin is many things to many people, and that is one of the main things that gives it its resilience.
Excellent. Noelle, always a pleasure. That was Noelle Atchison, Head of Market Insights at Genesis Global Trading. And that's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Join us tomorrow morning at 9 a.m. as well for First Mover. You're watching CoinDesk TV.